Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. And we're waking up to some grim news this morning coming from the capital city where at least 8 people have been killed and several are injured, firing your metal, realty and FMCG indices, which ended lower in yesterday's trading session. The breadth of the markets was also quite bearish because advances did take a backseat and declines took an upper hand. But yes, we did see some strong buying interest that came in from IT and pharma stocks, which rose about over 1% each on improved sentiment. But yes, coming to the cash flows positions of where we stand, FIIs, they were yesterday's net sellers, sold stocks which was worth about 4,000 crore rupees in the cash markets, DIIs, net buyers, buying stocks which was worth about 58 crore rupees in the cash markets. But yes, coming to the Nifty put call ratio, that has also rose by about 0.99 from 0.93 levels in the previous session. And one stock which has been added to the FNO ban, that is your sale as of now. But yes, let's take a quick check of how the pre-open rates look as of now, because it had been suggesting a mild start for the markets. If you look at the pre-open rates, Sensex is up by about 100 points. Nifty is also above that 25,600 mark. But whether or not this level gets sustained is something that we'll understand from our technical expert of the show. Joining me is Ajit Mishra of Religare Broking. We'll get to him. Ajit, good morning.
Yeah, good morning, Lavisha.
Good morning. Ajit, yesterday we did see that Nifty has snapped its 3-day losing streak. And of course, today it's the weekly expiry day. But what are the levels that we can watch out for?
Right. So, Lavisha, last week itself means, prior to those weeks wherein we were seeing more of time-wise correction. Last week, it was more of price-wise correction also because we slipped below the 20 EMA mark, which was placed around 25,600. In the last trading session, we made an attempt to reclaim that mark, but we couldn't sustain. So, basically, 25,600 is now the make or break area. As long as we are holding below this mark, consolidation will continue with 25,300 being the key support. See why we are not seeing this consolidation as negative as of now, because banking, which is the key constraint to the index, is still holding strong. We still managed to hold 20 EMA in the banking index, and the other sectors on the rotational basis are also offering buying opportunity or strength during this correction or during this consolidation. So seeing that, yes, consolidation might continue, and today being the weekly expiry, volatility usually remains high. So let's say in case if we surpass 25,600 in the early trade, there could be an attempt of a recovery towards 25,750, 800 mark, and that's the area basically where one should look for booking profits. And on the downside, in case if we correct and if we see any dip towards, let's say, around 25,400, 450 zone, there one should look for buying opportunity with 25,300 being the stop and 25,600, 650 being the target zone.
Okay, all right. All right, Ajit, let's also talk about if yesterday's sectoral moves. We did see IT stocks, one of the top sectoral performers. Can we expect the trend to continue given that we've seen that how the US markets have been buoyant on the news of ending the federal shutdown?
So sustainability, I guess, is the key word for IT. Means we have not seen anything major, since the earnings season has begun. Sustainability is something that is continuing. Means if you see the index, 34,200 to 36,600 broadly is what the Nifty IT index is hovering in. Off late, after retesting the lower band around 34,800 mark, we have seen this rebound. So it's good at least that we are not seeing any further damage, despite the news that is coming on, especially from the global front related to the AI bubble. So that has not impacted at least the IT stock here so far in a big way. So as of now, I believe that consolidation is more likely, and one should refrain from aggressive long when it comes to the short-term trade, especially in the IT counters.
Okay. But, Ajit, yeah, we have seen a good rally that came in from the PSU banks. Of course, in the past 2 months, they've made a smart comeback. Yesterday, they cooled off. But can we expect the trend and momentum to continue in the upcoming days?
So yeah, three sectors basically, Lavisha, where one should be focusing on. So within the banking, PSUs are likely to continue with this buoyancy. Means we are at the record highs or almost after 1.5 years of consolidation. Then we have metals and auto. So these are three key sectors that one should continue to focus on. And But yes, within the PSU banking space, prefer the counters which are trading closer to their 52 weeks high or the record highs, not the stocks which are still lagging or struggling around their record lows or 52-week lows.
Okay, okay, all right. All right, let's take some individual stocks in focus. We'll talk about Bajaj Finance first, given that the company did report a mixed set of second quarter performance. We did see some good observation coming in from its net interest income that has grown by about 22% on a year on year basis. OM has also grown by about 24% on a year-on-year basis. However, gross NPAs has inched up, but the management has said there is nothing to worry about as of now. But one set of reaction which could be seen, that is that the company has lowered its FY26 OM growth guidance to about 22 to 23%, citing some softer trends in the SME and housing segments. However, brokerages, they've largely remained bullish on the counter. Morgan Stanley has given out an overweight call. HSBC has also given out a buy call, and they've raised a target price for Bajaj Finance. But coming to you, Ajit, how does Bajaj Finance look like on the charts? I mean, it's a mixed set. They've lowered their OM guidance, but yesterday we did see the stock reaching about its 52-week high levels.
That's true, and in fact, we are very close to the record highs as well. Means the good part is that when it comes to the correction, it usually retraces towards its short-term moving averages, forms a base, and then rebounds. So it's a similar trend that we saw of late also. Means after a marginal dip towards 1040 area, we saw a consolidation for 3-4 days, and on the result day we saw a decent closing. So this indicates this overall up move to continue, provided we manage to hold this 1020 area on the closing basis. So that should be a stop loss, means 60 points away from the current levels. And since we are very close to the record highs, one should keep on trailing stop losses. Let's say once we crossed or inch toward 1200 mark, one can trail the stop loss to 1100 and continue to hold.
Okay, all right. That's the view coming in for Bajaj Finance to continue to hold on the NBFC giant. Let's also address about Britannia Industries, where Varun Berry has resigned as the vice chairman and managing director of the company, and we'll be seeing another Rakshit Hargave who will be taking place as its new CEO of the company from 15 December onwards. So yes, this is subject to regulatory approval as well. But yes, Britannia Industries, what is your view on the counter, Ajit? I mean, the stock has significantly rallied so far this year.
That's true, and in fact, if you see within the FMCG space, we'll just have very handful of names which are trading closer to their 52-week high or to their record highs, and Britannia is among those names. So Britannia, Marico, these are a couple of names wherein we are seeing decisive strength. But post this news, the initial reaction is negative. But we believe that consolidation is more likely, means closer to around 5600, 5700 is what the stock might face, support. And on the higher side, 6200 could be the upper band.
Okay, all right. We'll be watching out for Britannia as a stock in today's trading session as well. Could be seeing some negative reaction, but yes, the first rates coming on your screen where Nifty has opened mildly in the positive territory. 54 points gain coming in for the Nifty, 0.2% gains for the Nifty 50. Above that, 25. EBITDA is up by about 2%, and ARPU has risen by to about 180 rupees in the second quarter as well. But yes, Ajit, how do you make sense of the results and of course the results reaction?
So, see, when it comes to Vodafone Idea, we are seeing this, struggle continuing for quite some time now. And, when it compare it with the marquee name like Bharti Airtel, where we are seeing consistency in the trend, I feel that the prudent strategy is to stick with, the leaders. And as of now, yes, we are seeing a bit of an improvement. But for a timing, I still feel that a level close to around 10.5, 11 will continue to be the strong hurdle area. So short term, yes, we may continue to see some respite, but overall the trend is likely to remain sideways to negative.
Okay, sideways to negative is likely. Let's address another stock move, that is your Bharat Electronics, one of the top Nifty gainers today. We did see that the company has secured an additional order which is worth about nearly 800 crore rupees on October 30. But yes, the stock has been in a consolidation at a higher end. Ajit, the stock has been oscillating at about 400 to about 420 odd levels. What can we expect next for Bharat Electronics?
So, when it comes to the defense basket, very few names which are holding closer to their 52-week high decisively, and one such name is BEL. So the moment, let's say we cross this recent swing high close to around 426, 427, probably that can trigger the next leg of the momentum. So yes, in case if you are accumulating or you have a long position in any of these defense name, the preference should be given to this Bharat Electronics, and 404 should be your strict stop loss, because of late we have seen multiple tests of that area, but it has rebounded very strongly.
Okay, all right. That's a view coming in for BEL as well. Stock reacting well, 0.5% gains coming in for the counter. Let's take another stock in focus. That is your Sirma SGS Technologies, where the stock is doing well on the back of its second quarter performance. 2% gains coming in for the counter, where we have seen that the net profit has grown nearly double to about 77% on a year-on-year basis. Revenue is also up by about 38% on a year-on-year basis. But yes, Ajit, what is your view on the counter? 3% gains coming in for Sirma.
Yeah, so a strong reflection to the numbers means it's been almost 2 months of consolidation, more of time-wise consolidation means the stock was at record highs. Again, we are inching towards the same. So after this recovery, we anticipate a possible breakout this time, means above 860 it can inch toward 950,000 area. So definitely you can stay put. Now 800 should be a stop loss for fresh buying also. With 950 as a first target, then 1020.
Okay, all right. That's the view coming in for Sirma. Let's take some viewer queries that is getting dropped on our live feed. The first query coming in from Naveen is asking the view on Infosys for a positional trading. Ajit, what is your view on the counter? I mean, we did discuss about IT stocks, but for Infosys, any levels you want to underline?
So Naveen, I feel that we are very close to the resistance zone. Means last time also, if you notice that 1530 was the area basically where the stock reversed, and today we have tested the same mark. The long-term average is placed around 1537. So let it close above at least 1540. Then definitely you can consider for long positions. Let's say around 1630, 1640 being the first target area. In case if you have by any chance existing longs, 1495 should be a strict stop.
Okay, all right. 1495 could be a strict stop loss for Infosys. Let's take another viewer query on that note. We have Neeraj Sinha who's been asking the view on Eternal. He's asking if it is still a good bet because he has entered at about 351 levels, and he's asking whether he should average or exit at this point of view. Of course, from October onwards, you've seen the stock has been on a sliding trajectory, Ajit. But yes, 315 is where he has entered, and right now the stock is trading at about 300 rupees per share. What is your suggestion?
Yeah, so yes, it's a gradual decline. Means after topping out around the 366 area, and we have slipped below the first two critical supports. Means of late we have slipped below 100 EMA also. So this may result in further decline, but on the price wise, 300, 305 was the area basically from where last time we saw the breakout. So bulls might try to defend this zone, but adding to your loss making position is definitely not recommended, because in case if it fails to hold this area, then probably we are set for around 288, 290 levels. So as of now, 288 should be your strict stop loss for your existing position. You can look for adding to your position the moment we cross 320 mark, because then we'll have a confirmation that the stock has reclaimed the momentum. So until we see a decisive breakout above 320, one should refrain from fresh long or adding to the existing positions.
Okay, all right. That's the view on the counter. Let's take another viewer query. Then we have Naveen who's been asking the view on HDFC Bank. Ajit, of course, the stock has done well so far this year, but right now the stock has entered into a consolidation zone, and it has been quite some time. Do you expect this range-bound movement to continue in the upcoming sessions?
Yes, so indications are largely in the favor that we might continue to hold this band close from 950 to 1020. So, while we are seeing strength, in the banking space largely, so it's a very selective buying, especially the PSUs, they are doing well. And on the rotational basis, we are seeing that the private banking majors are also participating or at least holding their ground. So short-term view, I still feel that PSUs are better bet when it comes to trading point of view. But in case if you have made any investment and having a positional view of let's say 3 to 6 months, then definitely you can stay put. with 950 as a stop for SDFC Bank, with 1020 being the first target area, and then a newer high, maybe close to around 1100.
Okay, all right. 1100 odd levels. All right. That's the view coming in for HDFC Bank. Let's take another viewer query. We have Aman Jain, who's been asking the view on Tata Motors on how the stock is expected to do in the next couple of sessions. Ajit, of course, tomorrow we can see that the CV arm would be getting listed on the bosses. But yes, what is your view on Tata Motors passenger vehicle stock?
So still the same struggle continues, Lavisha. Nothing has changed, post this demerger also. And when it comes to the auto pack, we have handful of names which are comfortably quoting around their record highs. So be it Eicher, M&M, TVS. So if the view is short term, please stick with the trend. Means stocks which are trading or aligned with the index, benchmark index. M&M, in fact, is something that one can consider even at current levels. Means we are set for a new record highs. It's already a consolidation range breakout. So 3880 is what we are eyeing as a target. So with stop at 3570, you can look to accumulate M&M at current levels.
Okay, all right. That's the view coming in for Tata Motors as well. Let's take another viewer query. Then we have Contact, who's been asking the view on IEX from an investment perspective. IEX, today the stock is down by about 0.5%, Ajit. And in the past one, when the stock has fairly been range bound as well. How would you suggest, is it a time to buy at these current levels?
So Lavisha, since with this news that its monopoly is now in danger, so since then we are seeing this underperformance continuing in the stock, and we have not heard anything concrete, on the positive side for the stock as of now. Level wise, yes, we are very close to the support area from where last multiple occasions we saw a rebound. But in a market like this, wherein we are inching towards the record highs, and we have sectors and themes which are comparatively doing well, like PSU, banks, metal, auto. I feel that the opportunity is ample in those spaces. So one should act accordingly instead of focusing on the underperformers.
Okay, all right. That's the view coming in for the counter. Let's take another viewer query. We have NS, who's been asking the view on CG Power at the current market price, because he's bought the stock a few days back, and he's asking whether it is good to hold for a 25% profit in the near term. Ajit, what would you believe for CG Power? I mean, the stock has been quite range bound, but the viewer is asking if it is good to hold for a 25% profit in the near term.
So I'm sure that in case if you have a clear 25% upside target, then your downside is also that's something that you have thought of, means roughly at least not 1:1, but at least half, means 12%. So that too I feel is not an ideal strategy. See, now this 700, 695 to be precise, is the zone basically where we have multiple supports. In fact, in the recent swings, we've seen the stock finding support around 720 area also. But since you're targeting around 25% on the higher side, it should be slightly on the lower side, the support zone also. So with 695 as a stop, definitely you can stay put. For any fresh momentums, 755, 760 is the first area of resistance, and once we cross that, then probably we are set for 850. So 850 is the area basically where we last time saw the stock forming a record high. So around that area it might consolidate. So you should review that position once we reach to that mark.
Okay, all right. 750 is the level that is the first resistance that we need to watch out from CG Power as well. All right, let's take another viewer query. We have NS who's also asking about Hyundai Motors at the current market price, and whether there is some momentum which can be expected in the stock soon. Of course, the stock did react well to its second quarter results, but since then the stock has been quite range bound. Ajit, what is your view on the counter? I mean, the second quarter results were fairly okay for the markets.
The correction, price correction is indicating more of sideways to negative trend, because it has corrected substantially from its record highs levels, and currently we are hovering around the 100 EMA. Though we have very limited data, but still indications are in the favor that 2200, 2460 could be the zone where the stock might continue to hover. So if you have an existing position, use any recovery towards, let's say, 2460, 2500 to reduce your position if the view is short term, or you can switch to M&M as we have recommended earlier.
Okay, all right. That is the view coming in for Hyundai Motors, and of course, the suggestion is to look for M&M as of now. All right, let's take another viewer query. We have Solomon, who's been asking the view on SBI, and what is the level that we should enter as of now? What is your view on SBI, Ajit? Of course, we've seen that the stock had reacted well to its second quarter results, and today, however, the stock is not doing well, about 0.2% loss.
So definitely, like the PSU banking names, we have positive view. SBI is leading from the front. The stock has recently made a new record high after almost 1.5 years of consolidation. So intermediate profit taking is okay as long as we are holding above the short-term averages. So 925 is basically the area where we have 20 EMA placed. So with that as a stop loss, you can definitely stay put. Fresh buying, you may wait because we've seen a very strong surge from 800 to 960 area. So there could be further consolidation which can help the stock to inch toward let's say around 930 or 925 zone. So that will be the ideal zone to buy. But in case if you have existing position, then also you can continue to hold with 925 as a stop loss.
Okay, all right. That's the view coming in for SBI and the rest of the PSU banks as well. Let's take another viewer query then. Now we have Alex who's been asking the view on ONGC on how does the stock look like. Of course, the company did report its second quarter performance, and right now the stock has been exhibiting a gain of about 0.2%. If you look at revenue, that increased by about 3% sequentially compared to about 22% rise in the profit of the second quarter in this fiscal year as well. But the stock that has been exhibiting quite mild moves, 0.5% gains coming in from there. But Ajit, how does the stock look like in the near-term perspective?
So in fact, interestingly, Lavisha, if you see that most of the energy names, they are largely witnessing a similar kind of move. Means prior to the result also and post results, it's a very muted move that most of the energy counters are experiencing. The good part is that ONGC is still holding off its 20 EMA. Means 250 is basically the area where we have the 20 EMA placed. Uh, Intraday, yes, we penetrated that mark for brief, but it couldn't sustain. So very short term point of kind of a position in case if you're planning to maintain, then 248 should be your stop loss. 260 is the first hurdle, so risk to reward is favorable basis this risk to reward ratio. And for any momentum, let's say in case if we manage to cross this barrier of 260, then probably it might see a fresh momentum, let's say toward 280 or maybe higher. So as of now, it's a hold with 248 as a strict stop.
Okay, all right. That's the view coming in for ONGC. Let's take one particular stock, that is your Power Mech Projects. The stock is not reacting well to its second quarter results. Net profit has risen by about 12% on a year-on-year basis. Revenue has also grown by about 20% on a year-on-year basis. But yes, the stock is once again exhibiting quite a negative move. And in the past 1 month also, the stock has already slid by about 9% itself. Ajit, can we expect the underperformance to continue in this counter?
Yes, consolidation because we are very close to the long-term averages on the weekly chart. So maybe close to around 2050, 2060 is a zone basically where we have multiple supports. So which is still, yes, 10% down from the current area. So avoid any fresh long position in case by any chance if you have any long position, today's low should be your stop loss and use any recovery towards 2550 to exit your positions.
Okay, all right. Let's take another viewer query. We have Vishal Dave who's been asking the view on BSC, NSDL and CDSL and whether it is a good time to buy at these current levels. Ajit, or what is your view on these counters? Of course, both, all of them have been exhibiting some downward move in today's trading session.
Yes, so among these names, BSC has witnessed a strong rebound of late, after testing its long-term averages and in fact forming a base around 20 EMA. So it looks comparatively better in case if the view is very short-term, because we have very clear support also means 25-20, means 100 points down from the current area. It should be your strict stop loss. And in the next leg, after this pause, what the stock has been experiencing for last two trading session, maybe 28, 50, 29 is something the stock might attempt. So BSC looks comparatively better among all these three names.
Okay, BSC looking better at the current levels. Let's take another viewer query. We have Harish who's been asking the view on REC and PFC, and he's asking that these are still consolidating at the current levels, and what can we expect in the near term? How the moves are going to be? REC, PFC, any views on the counter, Ajit?
So yes, that is what I was mentioning, Lavisha, like some time ago, that the stocks related to the energy basket largely
Hmm.
they were sitting on sidelines in a very tight range, and there were anticipation that there could be a strong recovery or a rebound, but it turned out to be otherwise. Means we are seeing some profit taking emerging, especially in PFC and REC after this result announcement. But downside here also seems cap means we are already at 370 levels, so maybe close to around 350, 55 is something. The stock might find support. For REC, uh, it looks comparatively better than PFC. In terms of as of now the intermediate correction, and closer to around 348, 340 is the area basically where we have support. But yes, both look sideways to negative if the view is very short term. So refrain from any aggressive long in case if you have any existing position, you may consider exiting also. We need a close, a breakout above 380 in REC. You may note down these levels and a decisive close above 410 in PFC to for any fresh momentum or any fresh longs.
Okay, all right, all right. All right, just one last question before we let you go, Ajit. Any topics that you want to highlight? I know we discussed a range of stocks, but what are you liking right now?
So M&M definitely from the auto space, the Vishav that we like. It's a steady performer, and there's no surprises. There's also negative surprises so far, and we expect this momentum to further continue. 3880 should be your target zone for M&M with stop at 3570. One can continue to accumulate at current levels. Then we have Oro Pharma from the defensive basket, considering the market tone, wherein we are seeing strength. It's a base formation basically, which is currently undergoing. So with stop at 1120, one can accumulate Oro Pharma at current levels with 1220 as a target.
Okay, all right. Those are the two stocks that we need to watch out for. But with that, we have to let you go, Ajit. Thank you so much for your time and joining us.
Thank you, Nivisha.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Of course, we've seen a pullback as of now, despite starting the day in the green. If you look at Sensex, it's down by about 200 points, Nifty 2% as of now. But yes, with that, we have come to an end of this edition of Opening Bell. Do tune in at 3 p.m. for closing, and we will understand how the market is developed with our experts and also discuss the stocks that have grabbed the headline. So until then, signing off, stay tuned to moneycontrol.com for all the news updates and market insights.